What if the most reliable market forecast we have didn't come from a Wall Street supercomputer, but from a pig farmer in the 1800s? It sounds insane, but a hand-drawn chart made over 150 years ago by a man who lost everything, extended to the present day, called the market tops in 1999 and 2007. Its next big prediction for a market peak? 2026.
This is Alpha Signal. Subscribe for the reality beyond the narrative.
To understand the 2026 prediction, you have to go back to 1873. Samuel Benner was a successful Ohio farmer until the financial panic of that year completely wiped him out. Instead of giving up, he became obsessed with understanding the hidden rhythm of booms and busts. He was a farmer, so he thought in seasons, cycles of planting and harvest, of feast and famine. He started to wonder if the economy worked the same way. So he started digging. He spent years poring over the prices of corn, hogs, and especially pig iron, a key industrial commodity of the era. With nothing but a pen and paper, he charted out decades of data, and a clear pattern started to take shape. In 1875, he published his findings in a book called Benner's Prophecies of Future Ups and Downs in Prices. Benner saw these patterns repeated in cycles. He guessed this was all tied to natural cycles, like the 11-year solar cycle, which he believed affected crop yields, and in turn, the entire economy. It's easy to write this off as 19th century guesswork, but the chart has been aligned with several market events. It marked 1999 as a time of high prices and a time to sell. That year was the absolute peak of the dot-com bubble, a mania that ended in one of the most devastating crashes in modern history. And in 2007, Benner's chart again signaled it was time to get out. The market was high on cheap credit and a housing bubble everyone swore would last forever. Anyone who took the farmer's advice sold right before the 2008 global financial crisis brought the world to its knees. The chart isn't perfect, it's missed a few times, and its panic prediction for 2019 was a year early, but that was right before the COVID crash of early 2020. So what does this 150-year-old piece of paper say about our immediate future? According to the cycle, this period of prosperity is predicted to hit its absolute peak in 2026. The chart warns that after this peak, a long stretch of hard times is coming, possibly lasting all the way to 2032.
Now, what does this escalating war in 2026 means for your bank account? About a fifth of the world's oil has to pass through the Strait of Hormuz. If this conflict closes that strait, it would cause energy prices to skyrocket, almost guaranteeing runaway fuel prices and a worldwide recession. That tension is already being priced in. With Brent crude hovering over $100 a barrel, the markets are reacting in real time. Recent flare-ups in the Middle East have already sent oil prices swinging, and that directly impacts the cost of everything, from shipping and manufacturing to the food on your table, threatening to pour gasoline on the fire of inflation.
So, how does a 19th century farmer's chart connect to a 21st century geopolitical nightmare, a war of choice for control of the crude and regional supremacy? On the surface, they seem unrelated. But what if the forecast isn't just predicting a crash, but the psychological conditions that make a crash inevitable? And what if those same psychological forces are what's driving us closer to war? What if they aren't separate phenomena, but two symptoms of the same predictable human behavior? Think about the mass psychology of economic boom. In the markets, we call it greed, but it's more like a collective delusion. Everyone gets more aggressive as the prices go up, buying larger and larger volumes at greater prices. Logic gets thrown out the window, replaced by the fear of missing out. People repeat the oldest lie in finance. This time is different. It never is. We saw it with tech stocks in 1999 and with real estate in 2007. Now, imagine that same intoxicating feeling of invincibility on a national scale. When a country is roaring with prosperity, with the Dow Jones at its all-time high, its leaders can start to believe their own hype. A nation high on its own success, with a huge, high-tech armed force, with a comparable budget to the next 10 armed forces combined, sees the world differently. War is the tool to achieve a goal. There is no problem too big or too complicated that cannot be resolved by the force of arms. The economic good times provide the money and the confidence to roll the dice. In this case, overconfidence, fueled by a booming economy, which is fueled by the central bank, makes a nation far more willing to escalate a regional conflict into something much, much bigger. This is especially so given the long history of geopolitical tensions surrounding Iran and its oil. The war, born from the arrogance of the good times, could very well become the very thing that ends it.
So, are we capable of learning from history, or are we just stuck in a loop? Maybe the problem isn't that we forget the past, but we are doomed to repeat it because we're human. Knowing about past bubbles and crashes doesn't make you immune to the greed and fear that caused them. The data can scream, "Be careful," but that warning is easily drowned out by the roar of a bull market, the fear of missing out, or the blind panic of a crash. The real question isn't whether an old farmer's chart will be right again. The question is, can we ever break free from our own predictable emotional patterns that make us human?
This is Alpha Signal. Subscribe for the reality beyond the narrative.